Let's bring in Bill Baruch. He is the president of Blue Line Capital. Welcome to the show, Bill. Good to see you. I want to talk to you about inflation. We got the numbers this morning, 5.4% at the consumer level over the past year. I don't think it's going to go away anytime soon. My colleague Larry Kudlow disagrees. He thinks it's temporary. What about you? Is this level of inflation here to stay?
You know, a month or two ago, I was looking at this potentially being transitory, but this is 3 months in a row. And I looked at 3 months as being a trend. Excluding food and energy, we saw it year over year at 4.5%. That's the highest since 1991. We may see a little bit of tapering off here, transitory factors through the July and August reads in August and September. But I am afraid that this is here to stay for a bit. Maybe not those next 2 months, but after that, quarter four, I think we're going to see a lot of inflation. And ultimately, this gives credence. Today's results gives credence to the Fed tapering bond purchases sooner than later.
So if we've still got, let's say we've still got 3, maybe 4% inflation at the very end of the year, you know, October, November, December time, if it's still at that level, what happens to the stock market?
Well, the question is, have we tapered bond purchases yet? And you look at a Wall Street Journal article this morning from St. Louis Fed President Bullard, who is the one of the more hawkish guys. I'm also looking to Atlanta Fed President Bostic, who's talking today. He's moving up the ranks in the Fed. That's what I've heard. You should pay attention to what he has to say. So I think the hawkish voices are going to start coming out now, and that's going to force that hand in tapering, you know, coming into Jackson Hole or maybe even before it. But this inflation numbers, you know, it really gives credence to it. In the bond market is really today. You're seeing the 30-year bond; those yields are lower. They're doubting the Fed's ability to be able to taper those bond purchases. You're seeing the yield curve flatten, and that means lower growth, or it alludes to potentially lower growth. And you spoke about the Microsoft and Apple's. They're all making record highs because they love this low growth environment, and the Nasdaq is capitalizing on it.
Okay, let me turn to the cryptos. Supposing Bitcoin came down to, say, $25,000 a coin, would you buy at that level?
Oh yeah, I'm long right now. I mean, I got out a couple months back waiting for this market to come into 32,500, and it came into there. I've been starting to buy. I'm going to look for this and back the truck up down to 25,000. I've invested about a third of what I want to. I've pointed clients in the direction of getting exposure as well. But I'm not just looking at Bitcoin. I'm looking at Ethereum. I'm looking at other things like Solana. There's I think this is a space here that you need to have money invested in, and it's very tradable too.
Look, I'm reading between the lines here, Bill. A lot of technical stuff coming out of you this morning, but here's what I'm hearing. You're staying long on stocks. You're not that worried about inflation because the Fed will keep feeding this economy, and you're interested in cryptos when they drop below $30,000. That basically it?
You got it. That's right. That's right.
What do you think about Microsoft at $281 a share as of right now? I know you don't deal in individual stocks much, but look, I own a piece of that stock, and I'm interested in your point of view.
I own it. I'm an investment advisor. I manage money for clients as well. I'm also a futures broker. So I got my hands in really a lot of things across the board. I own Microsoft. It's one of the top 3 individual holdings that we have, along with Apple and Google. I think those stocks continue to make record highs. I think Amazon broke out as well, and you got to pay attention to that. So I think the market overall is going to be heading higher, and I'm looking at pullbacks as being a buying opportunity. One thing I'm paying attention to this week more than anything is the bank earnings. I'm overweight on the banks, and I think the banks are going to come out of this environment right now. I'm less concerned about the earnings here right now and more about what the 10-year Treasury yield is doing. And right now, the 10-year Treasury yield is flat on the day. Yep. A little surprised after this hotter inflation number, but I think we're going to see that yield tick up, and it's going to give credence to the banks in the second half of this year, and I expect them to outperform.
All right, Bill, we hear you, and thanks very much for being with us today. We'll see you again soon. Good stuff.